Everyone, and welcome to our last session of the finance course at Your Love Rara. This course or this session will be talking about investment tools and growing wealth. I know some of our information kind of laps over, but I will be getting a little bit more descriptive and detailed about investment opportunities this one. So if you kind of were missing out that information on the last one when we talked about savings and a bit of investment, this one will be much better for you. So let's go ahead and get started. So, what is investing? Investing is putting your money into assets and hoping that they will grow wealth over time. So, an asset could really be anything that is accruing money or has a certain set of value. So, assets can be your car, your house, stocks, savings, could be so many different things that are just money for you. Common types of investments are stocks, bonds, real estate, mutual funds, and others that we'll get a bit more into in a minute. And the benefits of investing is it's going to build your wealth. It's going to hopefully beat a lot of the inflation that we see. So hopefully you are accruing a certain amount of interest, and that will get you prepared for the inflation that is in the future, and it helps achieve financial goals. So, the power of starting young, this is a huge one. Time is on your side when it comes to investments. It is the best thing for you. So, it allows them to grow with the compound interest. I think we covered compound interest in the first session, which is just that it's going to be interest that accrues and accrues and accrues over time, and it'll always take that total, whether it's come from interest or what you've put in. So, it's going to take the grand total and always compound interest on top of that. So it grows faster than just your regular interest, and it is taking the money that's both been invested and that you've made just from interest and getting new interest off of that. So it's really great for time. And just, yeah, the more years you let it grow, the more and more money you're going to make. Small and consistent contributions will end up being much greater later on. So I know we've talked about even if it's just £1, if all you can do is £1 a week or £1 a month, it's still, £12 a year. And after a few years, that can be £100. And if you're also putting that into an investment account that's getting compound interest, that could be two or 300 or £400. So small and consistent contributions are always great. I know we talked about the 50-30-20 rule in the first session, and I do think that still applies here. If you can put 20% of your paycheck into the savings account each month, or whatever your investment might be, that is going to really set you up for a great future later on. And starting early just builds those habits. So later on, when you are maybe further into adulthood and having bigger payments and things, kids, cars, all those things, you'll already have these habits instilled in you, and it'll make it much easier to get through the process. So here's just some beginner-friendly investment tools. We've talked about some of these, some of them we have not, so I want to just go over it real fast. But financial advisors are a great way for someone else to kind of do a lot of the work, right? So sometimes we just have too much going on. It feels a bit stressful to even think about budgeting and figuring out where all the money's going and where it needs to be. So but a financial planner can be very expensive, is what I wanted to say. And it's not a luxury that we all have. So there are some robo advisors that are just automatic platforms that will help manage your investments and different finance decisions in life. Those two to check out would be Wealthfront or Betterment. And investment apps, which we have talked about a bit more, are apps like Robinhood, Acorns, or Stash. And this makes learning about the stock market a bit easier and just investing money super accessibly. Sometimes it's hard to find the right accounts, the right websites, and different things to put your money into stocks. Sometimes they're not legit and it can be a little scary. So these apps have been verified, and it makes it really easy to start learning and just messing around with the stock market. Index funds and ETFs are low cost options for if you want to start diversifying your investments, which diversify is a word you'll hear a lot when talking about investments. And all it means is not putting all your eggs in one basket. It's making sure you have maybe 10% of your savings in this stock and 10 in another and 10 in real estate and 10 in a savings bond. It's making sure all your money that you want to invest is not just being put all into one stock or one idea, because that one idea might not go well. And we don't want to lose all the hard work we've saved and prepared for that to happen. So if you have multiple different avenues in your investments, then it can really help with a greater return. And if something does go wrong, you might make it up in another one, and just helps kind of ease the stress. Savings bonds are just safe and they are steady growth options. So, again, when you're younger, I think this is a great option. It's super safe, and all it's doing is just slowly growing money off of whatever you've initially put in. So, I do think that's a great option for the younger people here. Balancing risk and reward. So, before we get into that, I do want to go back and talk a bit about the different types of investments that I would recommend. So, as we talked about, stocks and shares are a great way to start investing your money. The pros of that can be really high returns. So, it depends on how risky that stock is or that share. But that's something you can kind of weigh out and decide what's best for you. Dividends are regular income. So, you'll get dividends it can be different. So it could be each month, it could be every 6 months. It kind of just depends on what you are investing in, but they will come to you regularly over whatever period they decide. And so it's almost like an extra paycheck that you can kind of look forward to. Some people will just take that money and invest it right back in. Some will just let it grow. So it's really up to you. Another great thing about stocks and shares are they're very liquid. And when I say that, what I mean is they can easily be sold and you can get the cash right away. So it's not something like a home where, it's months of putting it on the market, having to sell it, go through escrow. That takes a while. Yes, it's an investment and it is an asset, but it's not as liquid, which just means, yeah, it's not as easy to actually access that money on the drop of a dot if something happens. There's also a lot of room for growth and diversification when it comes to stocks and shares. Some cons are that there is some potential for loss, especially in the short term. Again, time's on your side when you're doing some investments, especially with stocks. You want to keep them in there for at least a year. I know it can be scary because you see that thing go up and down and up and down, but it's best if you don't look at it sometimes. Obviously, you want to know when the right time to sell it is, but I would say at least wait a year before you even think about that, because they can just be so finicky at the beginning. And it does require a lot of knowledge and research sometimes to pick the right stocks. So that's something to keep in mind. Mutual funds, we haven't really talked much about, but a mutual fund is just a pool of money that's collected from many investors to then go into a stock, a bond, or other assets. So what it means is you're kind of collabing with other people, which can help. One, it's great diversification for your financial portfolio, and it reduces that individual risk. So you might only have 5% in there rather than a full 100% share. It's managed by fund managers, so you're not necessarily having to worry about all the different choices and which stocks to put it in. So it can be a really great option for people who aren't too confident in that area. And usually they're pretty low investment, or sorry, there's pretty low like minimum investment. So what that means is like you can spend less money. Sometimes shares, if you're going in on your own, could be 100 or 200 pound, whereas this might only be 10 pound to get your share. So that's a great option for maybe either younger people or someone who just doesn't have a ton of extra money to be spending at the moment. ETFs are similar to the mutual funds, but kind of traded like individual stocks. So they're lower fees than mutual funds, which is a good thing. They're very liquid, so just meaning you can get that money back very fast. And they do give you a ton of diversification. So those are the pros. And some of the cons can just be, they can be a little bit volatile. And some can have, depending on strategy of the person running it, some could have higher fees, but it really just depends. And the last one I'm going to talk about is bonds. Generally, it's a lower risk than stock. It's regular income through fixed interest payments. So again, you're getting payments. And government bonds are usually very low risk. So a great thing about that, like the UK gilts, is that you are not too worried that you're going to lose that money. It'll just slowly build over time, which, some of us hate the thought of losing money. So that can be a really safe option. The cons, though, are, the lower the risk, it's always going to have a lower return then, so you're not getting as much value back. But, still a really safe option. And just some other investment options I want to talk about, I'm not going to go into detail, but are real estate or ISAs, which is just an individual savings account, which is obviously stuff we have talked about. Pension funds. So if you're in a job that gives pensions, that's a great thing to think about. When you're talking about investment, you can put part of your paycheck towards that. Any startups, whether it be a friend or someone online, usually someone online can be a little sketchy, so definitely make sure it's legitimate. But especially if you know the person and you feel confident with their idea, it's a great way to invest some money and be supportive. Cryptocurrency, which can be a little hot and cold, some people love it, some people hate it. So I won't go too high in or like too deep into that one, but there's Bitcoin and Ethereum and other types. It does have really high returns, but it can be a lot of hacking and fraud in that area as well. So you just have to be safe. And then, of course, high interest savings accounts and just cash savings, which we have talked about. So let me move on. I know I just rambled for a bit. So balancing risk and reward, higher risk will always mean higher rewards, and lower risk will always mean lower rewards. And what that means is just a higher risk stock is going to give you more money. Their payments will be higher because it could also go plummeting at any time. Whereas lower risk, which are pretty safe and will slowly just move up, will maybe not give you as great of a return at first, but I do recommend a lower risk option because if you're using time to your advantage, whether it's 10, 20 years, it's going to add so much wealth to your life. And it's safe and you're not losing any money. And of course, diversifying, which we talked about. Magic of compound interest. So here's just an example for you. I know some of my examples have been a little maybe hard to keep up with, so I wanted to put this one in here. So if you invest $100 a month at 8% annual return, so all that means is it's in percent return on that $100, and you're investing 100 a month, so about 1,200 a year. And I know this is in dollars, but pounds, euros, whatever you're using. In 30 years with compound interest, you would have over 150K or 150,000 pound dollars, which is crazy to think about. Obviously, yeah, you're investing $100 of those 30 years each month, but that's really not, do 50 and that's still 75 grand, so the amount of money is going to matter and the amount of time are the two biggest things to think about when you're looking to set yourself up with some of these investments. So first, you of course always want to identify those goals, whether it's saving for a car, traveling, emergency funds, retirement, buying a house, university, just always make sure you align your investments with your goal and make sure you have a time outline of that, right? You never want to think, oh, I'm going to invest this and then in a year I'm going to have all this money. Nope. We're not even going to tell ourselves that because then we expect it. So make sure if you want to do something in 5 years, yeah, that's something you could start investing for and build up. But if you want to go on a trip in 6 months, maybe a better thing for you to look at is just your savings account right now and not necessarily investing money in extra things. So it really is dependent on what your goals are. Some pitfalls to avoid: trying to time that stock market. It is just, I mean, for any of you who understand it, props to you. I've really tried at different times, but it really just comes with a level of trusting the company you are investing in or the stock, and talking to other financial advisors, talking to other stock marketers, just really being in that world can help. And a lot of us aren't. So just don't, like go with your gut, keep it in there for a long time, and don't try and sell and buy and sell and buy, because it really will end up in a loop of just overwhelming. And I don't really want to recommend that to anyone. Um, Other pitfalls are not diversifying. So again, that's a bit of a luxury, but if you can, I would do it because it really does help in the long run. Ignoring fees that can reduce your returns. So you don't want to ever ignore any fees, especially if it's reducing those returns. We want those returns to be as high as possible. So make sure you're reading terms and understanding documents that are being sent over to you and before you're signing up. And investing without understanding the risks. There's are tons of different risks when it comes to these. I hope I explained some of those risks well, so you can kind of be prepared before going into some of these different investment ideas. But always, always double check, do your research, and make sure you understand all the different pros, cons, risks, anything. So some tips are just educate yourself about the basics. You're already doing that now, so go you, claps for you. Um, Start with small and consistent contributions. Again, it can be overwhelming to throw a lot of money towards something. So start small. It'll start to get you in the habit of putting some money aside each month or each paycheck, and it'll just grow over time as you learn to, live with however much money you're using, and maybe slowly, wanting to put more towards it. So then you're maybe spending less money on some wants and putting more money towards savings or investments. So always start small because it can be daunting and it will get easier. Stay patient. As we've said, time is your best friend. So it's going to take time. And that is, if you're an impatient person, it will be hard. But you've just got to kind of forget about it, which I know sounds funny because all of my tips are, check it, make a budget, do this, do this. But when it comes to investments, you kind of want to do it, be educated about it, and then leave it alone for a while. And I know it sounds crazy, but that is just the best thing to do because time will accrue so much more money than if you're, constantly looking at it and pulling away because you get scared or doing different things. And then a year later, it's top on the stock market and you get upset with yourself. So really just be patient and let yourself kind of learn as you go. And of course, seek help if you need it. If you're in a really dark place or you're really struggling financially, we talked about, there are financial advisors out there. There's even financial therapists if it's more of a just stress issue and different things like that. So always seek the help if you need it. It's not a shameful thing at all. We all struggle with money. Let's be real. Whether we're rich, poor, it doesn't really matter. We're all constantly thinking about money and making sure it's going in the right places. So we all my point is just being, people are going to understand, and it's not something to be ashamed about. And again, if you maybe don't have the money to do something like that, to get professional advice, maybe go to those robo advisors and check out those before you just, give up or not want to do it. Try it. You never know what could come from it. And so go ahead, and here's our closing statements. But the earlier you start, the more you can achieve. How many times have I said that? So many. Investing is a powerful way to grow money over time. It's literally free money, is what I like to say. I know it's not, but in a way it is. Because you're gathering all these returns and interest and different things. And so you're getting way more money than you're putting in. So it is free money, and you just gotta use the tools to get there. Always start small and just build from there, because nothing just happens overnight. So I hope this whole class and just sessions and everything above was helpful to you. And if you ever have questions, again, please come into our store, call, email, DM us on any of our socials, Your Love Rara _CIC. And yeah, we would be happy to help and even help you do some of this research. If you're just struggling to kind of, get started, we'll sit down with you and help you out if you come on in. So we're really here to help. And I hope this course was just a quick, intro to finance, kind of what some of the big words mean, some ideas to get started, and go from there. And I really hope you guys all have the best, financial success. I'll be crossing my fingers and sending all the amazing vibes out there for each and every one of you listening. And yeah, I hope you have a great day, and I hope you have a great year. And see you later.